All right, get ready because we're about to take a deep dive into the world of Charlie Munger.
Sounds fun.
You bet. And, we have some great material to work with here.
Yeah, we do.
We've got his letters to Wesco shareholders going back decades.
Decades.
Plus a recent interview where he really opens up some analysis from the Acquired podcast.
Oh, those guys are great.
So our mission today
Our mission.
is to extract the timeless wisdom of Charlie Munger
Time
on business,
Right.
investing,
Yeah.
and maybe even a little bit of life philosophy.
I like it.
Now, what's really cool is we're not just talking about theory here.
Oh, no.
Munger always brings it back to the real world.
He does.
He uses examples like the success of Costco or the downfall of companies like Kodak,
Yeah.
which makes his ideas so much more tangible.
Oh, yeah. You can really see how it works.
Yeah.
It's not just like some abstract.
Exactly. And it's fascinating to see how his thinking has evolved over the years.
It has.
But at the same time,
Mm,
his core principles have remained rock solid.
that's what's so impressive.
He's seen it all, market booms, crashes, you name it.
He had.
And yet his approach has this amazing consistency.
You're right. It's almost like he's figured out some kind of universal truth about...
Exactly. And one of the things that really stands out to me
Okay.
is that he doesn't just tell you what to think.
He doesn't.
He actually shows you how to think.
How to think.
And he does that by drawing lessons from all sorts of different fields,
Yeah.
history, psychology, biology, and weaving them together into this framework for making better decisions.
That's one of his great strengths, I think.
So let's start with the foundation,
Okay.
Munger's investment philosophy.
Let's do it.
He's famous for saying that he's not picking stocks,
Yeah.
he's picking businesses.
Businesses, right.
So what exactly does that mean?
Well, it means he's not just looking at the stock price.
Okay.
He's looking at the underlying company. He wants to understand the economics of the business.
The economics.
Yeah, does it have a durable competitive advantage?
A durable competitive advantage.
Right, a business model that can stand the test of time.
Yes.
He's not interested in quick flips
Got it.
or riding the wave of market hype.
He's looking for long-term value creation.
Exactly, long-term value creation.
And a great example of this is his admiration for Costco.
Oh, Costco's a perfect example.
But it's not just about their low prices.
No, it's not.
There's a whole philosophy behind their success that Munger finds brilliant.
It's brilliant.
So what is it about Costco that he loves so much?
Well, he's fascinated by the efficiency of their model.
The efficiency.
They have low product variety,
Okay.
high turnover.
Right.
Those membership fees create loyal customers,
That's a great point.
and they have minimal inventory investment.
So he's seeing brilliance in the simplicity of their approach.
Exactly. It's like
Yeah.
they've stripped away all the unnecessary frills to focus on what truly matters,
Yeah.
delivering value to the customer.
And it just works.
It does.
Year after year, they just quietly generate profits.
Without needing to chase those flashy trends.
And that's a stark contrast to what we often see in the stock market today.
Oh, absolutely.
Especially with the rise of retail trading.
Yeah.
Munger has compared it to gambling.
It is like gambling in a way.
People chasing quick riches without really understanding what they're buying.
I think he's concerned about that disconnect
Disconnect between
the real economy,
Okay.
where businesses are making products,
Right.
providing services,
Yeah,
and the financial markets,
I see.
where prices can fluctuate so wildly.
Peace on
Sentiment,
Dip.
speculation.
Got it. And he's particularly wary of leverage.
Oh, yeah.
People essentially betting with borrowed money.
Uh-huh. Which can lead to huge losses.
This reminds me of his emphasis on avoiding stupidity.
Avoiding stupidity.
He says it's not just about making brilliant moves. It's about minimizing those costly mistakes.
Oh, those costly mistakes can set you back.
He even uses this term, asininities,
Asinity.
to describe those foolish ideas that lead to bad decisions.
Yeah,
So whether it's falling for market hype,
right.
or overpaying for a hot company,
Uh-huh.
or ignoring ethical red flags,
Oh, yeah.
he's basically saying, don't be stupid.
That'd be stupid.
And this is where I think his multidisciplinary approach comes in.
Yeah, how did that tie in?
He's famous for drawing insights from all sorts of fields, history, psychology, even biology.
He believes that to really understand complex systems,
You need
you need to draw upon multiple disciplines.
It's like he's building this lattice work of mental models.
It is like that, a lattice work.
So instead of just looking at a business through a purely financial lens,
Right.
you're also considering The psychology, the historical context.
The historical context, yeah.
The competitive dynamics that might resemble an ecosystem.
Exactly. He's looking at the bigger picture.
Not just the numbers on a spreadsheet.
Not just the numbers.
And this ties into the idea of opportunity costs.
Oh, opportunity costs.
And understanding your circle of competence.
So important.
Munger is all about focusing on areas where you have a genuine edge.
He is.
He said that most wealth managers can't even beat the S&P 500.
That's true.
Which suggests
That's
that expertise is more crucial than ever.
Especially in a world where information is so readily available.
But true understanding is scarce.
Scarce.
So it's like, he's saying...
Know what you know.
And know what you don't know.
Exactly, and be willing to say, I don't know.
When you encounter something outside your circle of competence...
That humility is crucial.
It is.
For avoiding those big mistakes.
And speaking of expertise...
Okay.
One of the things that always stands out to me about Munger...
What's that?
Is the importance he places on partnerships.
Partnerships.
Especially his collaboration with Warren Buffett.
Oh, yeah, that legendary partner.
He often emphasizes the importance of working with people you admire. And trust individuals who share your values.
Share your values.
And complement your strengths.
Complement your strengths.
But it's not just about finding brilliant minds.
No, it's not.
Munger is very clear about the ethical dimension of business.
The ethical dimension.
He avoids associating with people or industries he deems unethical.
Unethical.
Or, as he puts it, sleazy.
Sleazy.
He sees integrity as a non-negotiable element of success.
Absolutely.
And he believes that aligning yourself with people of high character not only protects your reputation, but also leads to better long-term outcomes. And he's very outspoken about this.
Oh, yeah.
I mean, he's called out specific companies and individuals. Like his criticism of the Sackler family.
Oh, right, the Sacklers.
And their role in the opioid crisis.
That was powerful.
It's clear that for Munger, ethical considerations are not an afterthought. They're woven into the fabric of his decision-making process.
They're fundamental.
Absolutely. So we've covered a lot of ground here.
We have.
Munger's emphasis on understanding businesses.
Yes.
Avoiding stupidity. His multidisciplinary approach and the importance of partnerships and ethics. But what about the evolving investment landscape?
That's a good question.
The world has changed dramatically since he started investing.
Yeah.
So how has he adapted?
That's what I want to know. Well, he's not afraid to say it like it is.
What do you mean?
He's openly acknowledged that the investment landscape has gotten much tougher. Rise of index funds.
Okay.
Increased competition from really sophisticated investors.
Yeah.
And just the sheer amount of capital out there.
Yeah.
All of that has compressed margins.
Compressed margins meaning?
It's harder to achieve those outsized returns that were possible in the past.
Like he's even said it's almost impossible for most investors to beat the market now.
He has said.
So does that mean he's giving up?
Not at all.
What's he doing?
He's adapted.
How?
He's still finding unique opportunities.
Where?
Well, for instance, Berkshire Hathaway's investments in Japanese trading companies.
That's interesting.
It is.
So he's looking to markets like Japan.
Yeah.
Isn't he also known for his interest in China?
He is.
But what about the geopolitical risks?
That's what's so interesting.
What do you mean?
It shows his long-term thinking.
Okay.
He sees the potential in China, even with all the risks.
So this brings us to a key takeaway.
What's that?
How do we adapt when things feel so uncertain?
Munger would say adaptability is key.
It is.
He stresses lifelong learning.
Lifelong learning.
Constantly updating your mental models.
As the world changes.
Yeah, he's a voracious reader himself.
I've heard that.
He's always seeking knowledge.
From all kinds of sources.
And he encourages others to do the same.
Oh, yeah. He even joked once. If he were running the SEC.
He wouldn't allow people to boast about their past performance.
Why?
He thinks it creates a false sense of security.
I see.
And prevents people from adapting.
So you gotta be willing to change your mind.
You do.
When presented with new information.
New information.
And Munger is certainly not afraid to challenge conventional wisdom.
Like with cryptocurrency.
Oh, right. He's been very critical of the whole crypto craze.
He has.
Why is that?
He sees it as a speculative bubble.
Fueled by
hype and a fear of missing out.
So he prefers to invest in
productive businesses.
Businesses that
generate tangible value.
As opposed to
assets whose worth is based purely on speculation.
Interesting. And what about his investments in companies like Hermes?
Hermes.
The luxury goods maker.
Yeah.
That seems a bit surprising.
Why surprising?
Given his reputation for value investing.
I think it shows he's not dogmatic.
Okay.
He recognizes that strong brands can create value.
Even if
they come at a premium price. Hermes, with its focus on quality, craftsmanship, and exclusivity, have built a moat around its business.
Moats.
That's classic Munger.
The idea that businesses need to build defensible advantages.
So protect themselves
from. But are those moats getting harder to maintain?
In today's world?
Yeah.
It's definitely more challenging.
How so?
He's talked about how technology is disrupting so many industries.
Okay.
Companies that fail to adapt become obsolete very quickly.
And he uses Kodak as an example.
Oh, yeah, the cautionary tale of Kodak.
Once a dominant giant failed to embrace the digital revolution.
And it's often harder for those big companies
to
disrupt themselves. They have so much inertia. He compares it to a surgeon. Who's been practicing for decades.
Okay.
They might be reluctant to learn new techniques. Even if those techniques are better.
So if you're running a company.
How
do you avoid that complacency?
Munger would say you have to cultivate intellectual curiosity. Challenge your assumptions.
Okay.
And be willing to experiment. He also talks about incentives. He said that a focus on short-term earnings stifle innovation.
Contrasts Intel with
BYD.
What's BYD?
A Chinese electric vehicle manufacturer.
Okay.
He believes Intel got too focused on profits.
Lost its edge.
Has seen explosive growth.
Because of
a relentless focus on innovation.
Risk-taking.
And so it sounds like he's advocating for a long-term perspective.
He is.
Even if it means sacrificing some short-term gains.
He believes time is the friend of a good business, the enemy of a bad one.
He's willing to be patient.
He is.
Let his investments compound over decades. Which is a powerful message in today's world.
It is.
Where instant gratification is so often prioritized.
And that long-term thinking extends beyond investing.
It's
about building relationships. Cultivating knowledge. Developing a strong ethical compass.
These things take time.
They do.
But ultimately lead to a more fulfilling life.
They do.
So what does all this mean for someone who's not running a multi-billion-dollar company?
That's where things get really interesting.
And that's what we're going to explore next.
Let's do it. It's all about applying it to your own life.
Right. Like, how do we take these big ideas and make them actionable?
Well, Munger would probably say it starts with curiosity.
Curiosity.
He's always learning, always reading.
Yeah, he's a voracious reader.
And he encourages everyone to do the same.
To just be curious about the world.
Exactly. Explore different fields. Read widely, be open to new ideas.
So it's not just about being an expert in one specific area.
No, it's about developing a broad base of knowledge.
That you can draw on?
Yeah, in different situations.
It's almost like having a mental toolbox.
A toolbox.
If your only tool is a hammer...
everything looks like a nail.
Exactly, but if you have a diverse set of tools...
then you can choose the right tool for the job.
And Munger would probably say the best way to expand that toolbox...
is
through learning.
Yeah, and challenge your assumptions.
Don't be afraid to be wrong.
Don't be afraid to change your mind.
Or to admit when you don't know something.
That humility is so important.
It is, and it's a recurring theme with Munger.
It is.
It's not about having all the answers.
No, it's about having the right approach.
The right mindset.
Exactly, and recognizing that the world is complex.
And constantly changing.
So we need to be adaptable.
Lifelong learners.
And
that brings us to another key aspect of Munger's thinking.
Ethics.
He believes that ethical behavior
is not just morally right.
It's also practically advantageous.
It's like he's saying doing the right thing.
Actually helps you in the long run.
And he's not just talking about avoiding illegal activities.
No, he's talking about everyday ethical choices.
The little things.
Yeah, like cutting corners. Or associating with people who engage in shady practices.
Those choices can add up over time.
And affect your reputation.
Exactly. He believes that integrity is crucial for success.
Both in business.
And in your personal life.
And he's not afraid to call people out on this stuff.
Remember what he said about the Sacklers?
The Sackler family.
Yeah, and their role in the opioid crisis.
He was very critical.
He called their actions immoral.
It was a powerful statement.
It shows you how seriously he takes ethics.
So how do we incorporate these principles into our own lives?
Well, it starts with being mindful.
Mindful of.
The choices we make.
Even the small ones.
Ask yourself, Am I compromising my values?
Am I doing the right thing?
Exactly. And be selective about who you associate with.
Munger is very deliberate about that.
He surrounds himself with people he admires.
People who share his values.
And his commitment to ethical behavior.
It's also about being wary of situations.
Situations that could compromise your integrity.
Like if something feels off.
Or you see people cutting corners.
Yeah, maybe it's time to step back.
Have the courage to walk away.
Even if it means sacrificing some potential gain.
Because your reputation is precious.
It takes time to build.
But it can be destroyed in an instant.
So as we wrap up this deep dive into the world of Charlie Munger,
what have we learned?
What are the key takeaways?
Well, I think the overarching message is that true success
is about more than just money.
It's about cultivating wisdom,
developing a strong ethical compass,
embracing a lifelong journey of learning.
It's about recognizing that knowledge and a good life
go hand in hand.
And that the world is complex and uncertain.
But with the right principles,
the right mindset,
we can navigate those challenges.
And live a more fulfilling life.
And as Charlie might say, go forth and prosper.
But do it the right way.